At least two people call this the Trump 2.0 ETF, Eric and Todd Stone, of course. Do you agree with that label? Do you think that makes sense?
Well, I think this administration is going to be incredible for innovation, so I'm definitely not going to fight that. The only thing I would add is the flagship strategy, ARKK, includes the space, the innovation space that has been hit the hardest, was hit the hardest by regulation and a lack of M&A, and that was what we call the multiomics or genomic space. That, we think, is going to we're going to see the most profound implications of artificial intelligence in that part of the market. So when it comes to AI, we think that the biggest application in the next 5 to 10 years is robo-taxis, autonomous taxi platforms. The most profound is curing disease. And so that's what you would see. And this new administration is all about innovation and kind of rethinking what the heck we're doing in healthcare and why it's up to 20% of GDP, and still our results are not as good as in other countries. So there's going to be a whole new rethink, and I think that's going to fall into benefiting ARKG and ARKK as well.
Okay, so a rethink on that front. Also rethink when it comes to what's going to happen with TikTok. It's still not clear the future of this social media company, but we do know that President Trump is open to Elon Musk or Larry Ellison buying it in concert with the U.S. government. Is this something that you would, if it's publicly traded, want to buy for ARKW?
Well, of course, we'd look at the valuation, as always, and see if during the next 5 years, we believed it would appreciate at more than a 15% compound annual rate of return per year. So we know there are a lot of bidders out there, a lot of people very excited about TikTok, and we understand why. We just want to see the valuation. It is one of the most important social media companies of our age.
All right, Cathie, I have a request question from James Seyfert on my team. Of all your individual strategies, including ARKK, what do you think has the best setup right now?
I think the most underestimated is ARKG. And the reason for that is regulatory. A rethink altogether of what we're doing in healthcare. But as important for G and for a lot of our other names, the lack of M&A over the last 4 years has been a very big problem. There has not been price discovery. What will a strategic buyer pay for these assets? Because they weren't allowed to buy them. Now, if you look at biotech and pharma, I think that $400 billion of revenue, 30% of the space, is going to go off patent in the next 5 years. Our companies will fill that space, but they were not allowed to be acquired by, and therefore we had no price discovery.
Right.
That is going to change.
All right, Cathie, we have about a minute left with you, and you mentioned M&A. Something we're also waiting for is for IPOs to come back. And you think about the innovative companies that you care about, a lot of them just aren't going public. The extreme example would be SpaceX, but also down in the small cap space as well. What do you make of that? Do you think that's going to change?
I hope so. I do think regulatory changes will go a long way towards bringing back public markets. I think the number of stocks in the public markets has been cut in half in the last 20 years. And I understand why companies want to stay private. The regulatory quagmire that they enter in the public markets is really a lot of friction. And there's another reason, I would say, and that is in the private markets, there is a longer time horizon than there is in the public markets today. But I think that's going to change. I think that's going to change as more and more people understand how profound AI is going to change everything.